Time for the Weekly Market Roundup. I'm Steve White on the Rural Radio Network. Once again, an interesting week driven by headlines. Markets trying to find some footing. Corn and soybeans all slightly up on Friday. Cattle sharply lower after President Trump made some comments about what to do about consumer beef prices. We've got a couple of great guests to break down all of the week's activities. We've got Doug Simon from Tredas and Arlan Suderman joining us. Arlan, let's go ahead and just start right with you. That comment that the president made about we're going to do something about beef prices, that certainly seemed to spook some folks when it comes to what we've been looking at. Cattle futures down pretty sharply as we're closing out the week here, right?
Yeah, feeder cattle prices down to 9.25 limit, and that dragged fat cattle down with it as well. At a White House event, President Trump said, we've worked our magic again, and we're going to bring beef prices down. We worked out a deal to do that, and that really spooked the speculative funds who held large, long positions. We're not sure how large because we haven't had a CFTC commitment of traders report since first of the month when the government shut down, but it's believed to be large, and they went to liquidate positions on Friday ahead of the weekend, not knowing what headlines might continue to flow. President Trump, we know, had a good conversation with President Lula of Brazil last week. So does that mean a 50% tariff on Brazilian beef is about to come off? He had a good conversation with President Milei of Argentina this week. Does that mean we're going to dramatically increase imports of Argentine beef? We don't know the answers to that. We just know that the funds with their large, long position got spooked, even though we had sharply higher cash prices unfolding this week.
And Doug, I want to bring you into the conversation as we look at things on the grain side. There continues to be this government shutdown, 17 days and running. We're not seeing all the normal reports we see. We continue to see some volatility based on headline movement. How does all this headline risk kind of make hedging and marketing just even more complicated than it already is, Doug?
Well, we've been a little higher this week for, 5 days. We had low on Tuesday. So corn and beans are both higher, as we go through the week. We put in that 390 low in D's corn back, 2 months ago, and we rallied up to 432 or so. And now we're in the 423 range right now. So we've had a bounce in there. What we're seeing is that the carry starting to come out of the D's to March corn spread, and also the carry and the soybeans has dropped. I mean, it was out toward 20, it dropped to 14 that November to January carry. So we're starting to see some of our basis levels firm up out there on both of the corn and the beans, especially like right around here when our bean harvest is starting to slow down. We're looking at processors pushing their basis levels to make sure that they're trying to get access to those beans that are still moving off the farm before they go on the bins. And so in terms of paying attention to the headlines right now, we're more paying attention to what cash markets are doing, how people are moving corn off the farm, soybeans off the farm, and trying to decide if they want to pay storage or if they want to go ahead and sell that soybeans. But also keeping in mind, I've talked about that the last several times I've been on here, what's their ARC County and their PLC base? How are they going to manage that risk and what are they going to do about it? But we have had a nice little rally this week. And like I was saying, nice little rally in some of the basis levels. Like the Council Bluffs market's gone from a 30, 33 under market down to a 22 under market. So they firmed up. And ADM Lincoln, for example, was posting 75 under, and there's some people trading 45 under into there right now, trying to track beans. So those are exciting things. I think there's a lot of questions about what the corn yield is out there. Bean yields seem to be pretty exceptional, but they seem to be really mixed from what I'm hearing in Nebraska, but also across the main areas of the Corn Belt.
Doug, you just stole my next question. I was going to ask you what you think about yields. So we'll ask Arlan. Arlan, what are you hearing? Since certainly we're not seeing USDA crop progress, we don't really know officially how much of the crop is in the bin at this point, so to speak. But what are you hearing, Arlan, in terms of yields? How can we measure that right now?
Yeah, and farmers have been working to get the crops in as quickly as possible with look like a more active weather pattern coming, which may have more wind with some of the disease problems we had. Stock health isn't at best in many places, so they're trying to get it in. We get daily yield reports in here, and I don't think I've ever seen a year when we saw such a widespread in yields. Especially for corn with the disease problems we had this year and the dryness problems across many areas of the Midwest. Some very low yields, some very high and very impressive yields, depending on where you're at, what the disease pressure was, etc. Overall, I think the general expectation is we're still coming down. Now, I looked back to 1993 over that period of what is it, the last 32 years or so. And we saw the yields come down from USDA 12 times over that period of years, from the September report to the final. And if you look at the extremes there, it was just fractional losses all the way to, I think, is a 12.4 bushel yield decrease in 1993. It was better than a 9 bushel yield reduction in 2010, but the average over those 12 years of the reductions was about 5.3 bushels per acre. And frankly, that's probably about in the middle of the expectations that I've seen from a lot of people where we may end up. That doesn't necessarily give us a bullish scenario, but it certainly makes things a lot less bearish, removes us from the overly burdensome supply, even though it's still a record yield if that were to happen.
Yeah, Doug, I want to circle back on something you had mentioned. You talked about this idea of storage. What kind of considerations are there this fall as guys are thinking about storage needs, and if we're going to have a big crop and needing to store some, and some of the options that way? What do you think?
Well, you're looking at 6 cents a bushel per month on corn, and somewhere 7 to 8 on beans. And you look at, if you put that in there, there's actually, carry out to the furs, which is attractive if you were storing it on the farm. But if you're storing it in an elevator, they're probably not going to increase the basis enough by Christmas time, for example, to be able to cover that cost of storage. And they're probably not going to increase, just the overall, price is probably enough to cover that storage either. So probably a better way, if you're going to look at Jim Kendrick from the University of Nebraska, say if you're going to speculate on higher prices, there's a lot more efficient way to do that, and be looking at either buying a call or some different type of option strategy. But looking at that, and if you're going to spend, get all the way out to May, you're going to have 7 months times 8 cents of storage, you got 56 cents. And there's calls that are cheaper than that you can do that to keep ownership of that crop, which I've been arguing that you really need to be interested in keeping ownership of that crop, relative to your PLC base, because if we have a strong rally like we did in 2019, and those PLC or ARC payments, which improved dramatically underneath the one big beautiful bill, or the potential for them, if those go away, if you sell your corn or beans here at the low spot, we rally, you don't have calls, and you don't have those PLC payments, you're going to be in a definite financial pinch.
Very interesting. Arlan, I want to ask you about what's going on with China. I know you've been following it pretty closely. We've heard all this discussion about these components that we need for all of our technology industries, but the president certainly has been starting to talk about agriculture as a component of trade talks. He says, "Hey, we're going to have something. We're going to talk to China in a couple of weeks. Everything's going to be just fine." What do we need to be watching in terms of what do you make is really going to be happening here?
Yeah, he's really built the expectations up, saying everything's going to be fine when President Xi and I get to talk in a couple of weeks. And so that's one big reason why we've seen strength in the soybean market. But there are some significant challenges here, and it goes beyond just our ability to trade soybeans with China. It's really kind of China's fight for survival, not just for survival, to reach their stated goals of knocking us out of the position of having the top military and the top economy in the world. And it goes back over the last 30 years. Their strategy started at least 30 years ago, when they started very quietly to try to corner the market on rare earth minerals and magnets. Most of us don't know much about those things, but those are essential components to today's high technology industry, all the way from cell phones to automobiles, to airplane engines, etc. All require these, but most importantly, our defense weapons, and not only for us, but much of the world. And China's now cornered the market to where they control 90% of the supply, which means they can pick winners and losers of which countries are able to have economic development and build products, and which countries cannot. But they can also pick winners and losers on which countries have what they need to build defense weapons and which do not. And so that's put China in a pretty powerful position if President Trump lets them get away with that. That's on top of the port fees, which they had slowly cornered the market on that to where they were building most of the ships in the world, and that would have given them the opportunity to control trade as well. And that kickback on that with the port fees actually started during the Biden administration. President Trump exempted bulk carriers that carry grain. China has, as expected, put retaliatory tariffs in place. but this is really a fight for survival between the United States and China, and soybeans have got caught in the middle of it.
Yeah, it is fascinating that, and as mentioned, those components that we're talking about are so critical, especially for our defense industries. But now soybeans all tied up in it as well. Doug, a question for you, and you've kind of already touched on this, but just in terms of there's so many different headlines that are swinging things, the tariffs, the shutdown, all of these different things. Just how can a producer try to manage all this risk and just kind of keep a clear head as they're to just try to manage their operation, put pencil to paper, and hopefully coming out in their favor this year?
Well, the 25 crop marketing started over 12 months ago, and so now we're looking at 26 as well, and looking at those input costs. And I mean, some of those outside markets have been pretty crazy today. Palladium's down 8.5%, silver's down 5%, gold's down 1.6%, Bitcoin's down 16%. So we over the last few weeks, but some of those, like that 8% move today, and there's going to be a lot of volatility. So you got to get objectives in your mind. And you're looking out towards next year already. Look, what are those fertilizer costs? For example, heating oil, it's probably down 35 cents in the last 3 months here. So we've had some of the energy prices have come down, but we've got a lot of people that have been buying anhydrous. And so you go out and you sell an increment of corn to match that revenue that you would generate from that corn that you would that you're going to commit to that to buy that fertilizer. So you got to be looking at strategies. And again, next year, the way the big beautiful bill is, the ARC County and the PLC will still probably be in play if we have this similar price regime. So really, it's about thinking about all your different sources of revenue. We also have ECO and SEO that was subsidized. They increased last year. It's going to increase even more into next year. So you really got to get everything down on paper and understand that. We had a lot of farmers when corn was down to 390, a lot of anxiety, but it said, hey, we've got hedges on, or we've got put spot, you've got our county PLC, you've got ECO. There's all these revenue sources. So the anxiety levels went down quite a bit, went through a lot of that analysis. So it's really trying to get things together in a plan. And if you listen to everyday headlines, it's going to drive you crazy. So it's more about being what's going to, if prices move. It's like I had cattle producers and cow calf guys talking to them all morning about hedges. So some of them were happy that the market was lower because of the hedges that they got on. They've maybe overhead, or they're hedging up and trying to push forward and protect next year's cattle crop, or calf crop. So there's a lot of that. So the anxiety right now is like, well, should I be lifting hedges or putting on more hedges? There's a lot of that. And this is like $8 corn in the cattle markets right now. You don't get those opportunities very often. So it's really hard to keep your head. But one cattle guy said, hey, if you get out of a position here today and it goes down, 2 more days the limit, you're going to be sick. So you got to really get your head about yourself. And it's more about where is it in the context of my margins and what am I doing big picture? If we were happy hedging, well, cattle, for example, have been up, $30, in the last 3 weeks. So, and we're down 10 today. So in the big scheme of things, we're still at all-time records yesterday on cattle and feeders, and we're off pretty hard today, but in the big scheme of things, they're still really good prices. So you really got to put each day's volatility in the perspective of a bigger plan. Otherwise it makes you really wears you out.
Yeah, some good thoughts there. We're about out of time. Arlan, maybe a final thought from you just in terms of keeping your head during these volatile times.
Yeah, exactly right. And I know where storage is tight, a lot of farmers are facing a decision, sell across the scales or take DP contracts were offered. Keep in mind the DP contracts may be the best thing to go with sometimes, but they also remove the need for the market to rally basis down the road because they already have the grain in hand. So it's not always the best for the farmer.
Well, very good. Thanks so much again to our guests this week, Doug Simon of Tredas and Arlan Suderman of StoneX. As a reminder, certainly trade does involve opportunity for some risk, so to be mindful of that. Thanks for tuning in to the Weekly Market Roundup on the Rural Radio Network. I'm Steve White.